Hi, my name is Caleb McLemore, and I'm a real estate agent with Keller Williams. I'm joined today with Justin Boyd of JB Mortgage to give you insights into the lender side of home buying and selling. So without further ado, let's get to today's question. As almost a follow-up to last week when we were talking about the down payment, costs that can take people off guard on both the buyer and seller side is closing costs. So what do lenders offer to help people out with whatever the closing costs may be?
Great question, Caleb. So first and foremost, the closing costs can be paid by third parties. So it's important to note, most programs allow up to 3% of the loan amount in a credit from people like the seller. So oftentimes as a seller, when you're thinking about reducing price, instead of reducing your price, think about offering a credit for closing costs for a buyer to maybe buy down their interest rate or cover some of their costs. They'll see a much larger impact on their monthly payment by doing that than the simple reduction in the sales price.
Okay. Yeah, and of course, whenever you sweeten a deal like that, it makes the whole mortgage process just go faster for everybody.
Yeah, and I think, if we're looking at ways to source that credit from other avenues, anytime we price a loan for a customer, we can choose a number of different interest rates on any given day.
Okay.
There's what we call the par interest rate, which is, if you ask me, what's today's 30-year fixed rate, I would quote you the par. There's also rates that are lower than par that require discount points, so additional costs. The inverse is true if you take a rate above par. So if the par rate is 5.5, if your buyer took a 5.75, they might receive a 0.5% of their loan amount in a credit given by the lender. Wow. So that's another creative way to help offset closing costs.
Fantastic, because I know there's many people that takes them off guard, and that can lead to a lot of fighting right before you get to the finish line. So good to see where lenders can be kind of the saving grace in a situation like that.
Yeah, and it's always important to speak to your loan officer about the cost of taking a higher rate, and things to consider are how long you're going to own the home, or essentially how long you'll own that mortgage. And the shorter the time that you plan to own it, the more realistic or the more beneficial taking a higher rate can be. Because long-term, a higher rate will cost you more, but short-term, sometimes taking those credits is the best option.
Well, fantastic. Well, thank you so much for your insight. We'll have more videos coming out soon. So once again, send in any and all questions you've ever wanted to ask a lender, and we'll see you in the next one.